We're in section 4 and we've just talked a little bit about how to start setting up some of the accounts in your chart of accounts. I want to go ahead and finish telling you how to set up the rest of those accounts. So let's flip over to QuickBooks and we'll keep going. The next type that I want to talk to you about are what we call your liabilities. A liability is something you owe. Now, I'm not talking about the monthly payments you have to pay for the electric bill, things like that. What I'm talking about is a loan you've taken out of the bank. When you think about your liabilities, there are really two types. There are what we call long-term, which are things that you're going to pay on for more than 12 or 13 months. And then there are short-term, which is under a year basically, and QuickBooks calls them other current liabilities. When you set up your liabilities, you want to set up a separate one for each loan that you have. And when I say loan, it could be a car loan, it could be you as the owner decide to set up a loan where you put money into the business and you want to get paid back. You might have borrowed from the bank. Those are all different liabilities you want to set up, and each one should be set up separately. Let's set up a car payment so you can get an idea of how you would set up these accounts. I'm going to click on New. And the first thing it asks me is to pick the account type. Here, you're going to see your other current, which is the short term, and your long-term liabilities, which is what I'm going to choose in this case. Another thing to notice is that where it says detail type, if you see notes payable, that's just an accounting term for a loan, basically. Over where the name goes, this is where you're going to pick the name that you want for your loan. I'm going to call mine the Bank of Any City, but you can call this anything you want. Sometimes what I'll see people do is put the last couple digits of their account number here, just so that they can see which loan they're looking at when they have it pulled up in front of them. Description is totally optional. This is where you might say that this is my 2019 Jeep Cherokee loan, or you can leave it blank. And then we're going to have to pick a start date. Now remember, if we're starting our company the beginning of the year, what you'll want to do is, for your beginning balance here, find out what the amount you owed as of, in this case, January 1 was, so that you can plug that in. It's not the amount you started with when you purchased the vehicle 2 years ago, it's the amount you owed as of the start date of your company file. I'm going to put $15,000 in here, and then hit save and close at the bottom. And now what you're going to see is that you have a loan right here. Notice it says Bank of Any City, and the balance is $15,000. Every time you make a payment on the loan, this is the account you want to put it to. Your car payment is not an expense to the business. Do not set it up as an expense account. It is a loan, and you want to know when you've paid off the loan. You'll also be able to, on each individual check that you write, you're going to be able to put in how much is principal and how much is interest there. The other thing I want you to notice here is look at your opening balance equity. It's a negative number, and that's because I said that when you owe something, it's a negative number. And this is an accurate picture of what your books look like. Let's talk about credit cards a little bit. And I'm talking about credit cards that your business uses to purchase items for the business. This has nothing to do with accepting customer credit cards. You want to set each credit card account up separately so that you can track each one. I'm going to go ahead and set up a new one for you. The type is going to be credit card. I'm going to name my card. I'll just call it Visa. And I'm going to pick the start date of my company file, the beginning of this year, and the starting balance would be the starting balance from my January bank statement. If you don't have your January bank statement, then you can grab your December of 2019 and plug that number in. I'm going to say it was $2,500, and I'll save and close. And now what you should see is that you have a credit card and you owe $2,500. When you make a payment towards the credit card, you're going to actually put it to this account always. Do not try to break it up that so much is gas and so much was meals, because there is another way to do that in QuickBooks. All the payments go directly to the credit card account. Going down the list, the next type that I want to mention is where you see equity. Equity basically means equal. If you think about it, you're the owner of the company. When you take money out, that's considered an owner draw. When you put money in, it's considered an owner contribution. Now, they've got some other terminology. You'll notice owner investment is when the owner puts money into the business, and owner pay and personal expenses is when the owner takes money out of the business. What I don't want you to do is make a deposit from your personal account and consider it income. It is not income to the business, it's considered equity. The next type that I want to talk to you about are your income accounts. I'm going to scroll down just a little bit here. You're going to see that there is one called sales income, and typically when you make a sale for your business, this is the account that you want your sales to dump into. You can have a few extra ones added if you'd like. Maybe you have different areas that you do business in, and what I mean by that is in your company, maybe you have different things that you do, and you'll want to actually set those up so you can see how much income you're getting from each one. That's certainly okay. Keep that list pretty short though. No one wants to read 50 different lines of income accounts, but sales is normally where you'll see most of that go into. The next thing I want to mention is your cost of goods sold. Think about the things that you have to buy to make a product or service in your business. You have to buy materials. You're going to need subcontractors sometimes. Maybe you have freight that's part of that. Anything that you have to buy to make a product or service in your business is considered a cost of goods sold, and you want it to show up on a profit and loss as being deducted from your total income. The largest grouping that you're going to see are your expense accounts, and you'll see there are a ton of these here. You'll also add a lot of these. Let me show you how to add some sub-accounts so you'll see how this works. Let's use car and truck as an example. We have the main account here, but I want to add a sub-account called gas and maybe another one called repairs and maintenance. All you're going to do is go back up to the new option in the top right of your screen here. You are going to create a new account, and it has to be the same type as the main account. So that means this one has to be an expense account. And in this case, it is auto. And I want to name this one fuel. What I'm going to do is check it's a sub-account of, and then from this list here, what I'm going to end up picking is car and truck. So see how that fuel is a sub-account of car and truck. And when I click Save and Close at the bottom, I want to show you how sub-accounts look. See how fuel looks like it's indented a little bit? That's a sub-account. And there's going to be a lot of these you'll want to add. When you're going down this list, think about insurance. You might have general liability. You might have auto insurance. Those would be sub-accounts of insurance. Going down under legal and professional fees. Often what I'll see is accounting and the attorney will be sub-accounts of legal and professional fees. And you can just come down and make this list look any way you want. There's utilities at the bottom. You'll want to have telephone underneath, gas, electric, any of the utilities that the business pays. That's going to give you a quick overview of setting up your chart of accounts. Make sure you spend some time on this and get it set up the way you want it. You want it to be as detailed as you need it to be to get your numbers, but don't make it so detailed that no one wants to read it. You can always set up accounts later as you go along as well, because you're not going to catch them all right away. Well, that's going to wrap up the chart of accounts. Let's go ahead now and move over into Module 4, and we're going to talk a little bit about working with accounts receivable, and we'll start with learning how to set up customers.